Hey, it's Lorne here from Dominion Lending Centers, Expert Financial, OptimalFinance.ca. A few weeks ago, I came up with a program called Co-Ownership Purchase Financing. And basically what it was is it's a program for financing available within the GTA, so general area of Toronto and surrounding area, that basically gives you the balance of whatever you need to get a 20% down payment. So what does this do for you? One, it allows you to qualify for a higher mortgage because now there's no more limit of a 25-year amortized mortgage. There's no more CMHC fees. There's no more insurance fees, all those premiums that we're going to be put on. And allows us, once we put it to a 30-year amortization, allows us to increase the actual mortgage amount, probably without even increasing the actual payments, because now we're extending it to 30 years. So it increases that amount. Add on the 20% down payment on top of that, and boom, that it now is your new purchase price. So what it's doing, it got families that maybe qualified for a $400,000 condo. With this particular program, it went to $570,000 with that particular family, and the second family that qualified for $900,000, they had $100,000 saved for their down payment. They actually went to $1,150,000. That's their purchase target. It can actually help you definitely get into a home sooner. If you have 5% down, you can buy up to $1.7 million under this particular program. The maximum you can get under this program, $2.5 million. You'll need a higher down payment on that, but if you just have 5%, 1.7 would be that ceiling. Still gotta qualify you for the mortgage, but we do it on a 30-year amortization. That's how the magic of the program works. Now, down the road, when you actually sell that particular home, you're going to pay the co-ownership company that actually give you the rest of that down payment, their portion of the equity position that they have in that particular home. So if I put 10% down payment, they put 10% down payment, that's a 50% equity portion in the down payment. If I make $500,000 on the home profit, I would get $250,000. They would get $250,000. But I would also be making the principal payments towards those mortgages, that mortgage, and so I get all that back refunded to me too. So if I paid $100,000 off that mortgage, then now I'm going to be walking away with $350,000 that I can now go into that next home. I get a lot of questions in terms of once this video came out, I was slammed. Like everybody said, oh my goodness, this could be good. Some people say this is too good to be true. Other people are saying, is this the best thing for me? Well, that's a great question to ask yourself, because you need to ask us. But one of the things is we actually do an assessment. Don't forget, we're not connected to any one lender. We deal with 40, 50 different lenders. We deal with a lot of different lenders, but it's about you. It's about getting you to where you want to get to and the best solution. If you have an option where you have family members that could maybe give gifts and things like that to help increase that down payment, we would definitely look at that first, right? So that would be the first scenario, because then you don't really give up an equity position in the property. Sometimes we'll do a combination. So some will get a gift in, so we'll increase your equity position and then just top it up with co-ownership. Maybe we can come up with 15% in total and just 5% on the co-ownership. They would just have a 25% equity share in the future value. Great thing about this particular program, there's lots of options. So I had a few questions come in and I thought I'd address this with you guys too. One is, are they entitled with 100%? Absolutely not. They are not entitled. There's no liens. There's no interest payments. The only thing is there's a beneficiary agreement in the background that prevents you from selling it without paying out their portion or a calculation of their portion. Yeah, you can refinance, you can do whatever you want. It's your mortgage, your home. It's just Uncle Nunzio gave you some money for that down payment. You just got to pay them down the road when you sell the house. Another question, what if I sell that house, say 5 years from now, and the value's gone down? Do I still have to pay them that money? That's a great question. The cool thing about this particular program is it's a shared equity risk position. All right, so another question I had, will I always have to pay them back? Is there any situation that I may not have to pay? Well, I guess there is. You know, what if I bought a home for, say, $1 million, okay, and then let's say I go to sell it 5 years from now, but there's some dramatic turn in the market, and maybe that property that was $1 million that we put 20% down collectively is now worth $800,000. What would I have to pay them back? So let's say now I started with a mortgage $800,000. I paid $100,000 off of that mortgage, so I have $100,000 of equity that created myself by making those mortgage payments. Well, what would happen down the road if the value was $800,000? How much would I have to pay out my co-ownership partner? Would it be zero, because we just decreased value, right? We're selling it, and this is what the value is. So that's where the risk, they should have that shared risk. They share that. They win when you win, and that's how much they believe in this particular program. Okay, and they believe it's going to work for not just for them but for you, because they really believe the market, especially within the GTA, is going to be increasing, so they share that particular risk. So another question, do I still need to pay the mortgage insurance? So CMHC or Genworth, let's say I have a 5% or 10% down payment. When you're buying any property under $1 million, you can buy with less than 20% down, and but there'll be an insurance fee. CMHC, Genworth, or which is Sagan, and Canada Guarantee are the three insurers. There's an insurance premium that gets put into the mortgage, they get blended into the payments. That's how it works. When under this particular program, because we're actually giving a 20% down payment, that eliminates that. In one case where I was just dealing with clients, they were going to pay $24,000 in CMHC fees, gone, because we had 20% down. There's also an advantage. Let's say, for example, if I have 10% down towards this particular home and the co-ownership company has 10% down as well, we're also sharing in the land transfer tax and the closing costs. There's a savings on our closing as well. Another question I have is, let's say I get approved, when can I actually buy a home? Like, what is the process? So again, the process is that when we get your application in, we're going to let you know two things. We're going to let you know how much you qualify for a regular mortgage based on your current situation. Then we're also going to introduce you to this program and let you know how much you would qualify for this particular program with the co-ownership. And basically what we do is we now say, let's assume there's a 20% down payment. We'll extend it to 30 years, increase your mortgage amount, add the 20% down payment. Now that's a new threshold. And that's really as simple as the process is. Once we get all the information in, we actually will get you a pre-approval certificate. Getting that actually involves a quick interview to talk about the areas that you're actually looking in, making sure you understand the program, how it works, and getting something in your hands. So then you, the realtor, can actually go now find a home. The amount of time from when you actually purchase the home to the closing has to be a minimum of 40 days we're asking for, okay? So just keep that in mind when you're actually, don't go and find the home, say I'd like it to close in 10 days. There is a little bit more of a process, so make sure it's a minimum of 40 days. Another question I get, can I use my own realtor? Absolutely. First of all, having a good qualified realtor to actually help you navigate through the landscape of this crazy world of real estate right now is so important, and it's so critical to have somebody on your side to do that. So congratulations for investing in the realtor that you're using. There are qualifications that the realtor would need. So if, for example, you are interested in this particular program, you need to introduce us to your realtor so we can make sure that we get them onboarded so they actually have all the resources they need to execute this particular program. Easy, simple to do. Just give us the intro and make sure that we'll get them set up and make sure that they know exactly what's expected when qualifying under this program. Another question, Lorne, I'm looking to buy in London, Guelph area. Would this program work? Unfortunately, not yet. It's not to say that the areas will not expand, but right now we're talking GTA and immediate area. Here are the areas, again, that you can actually use this particular program. And there may be some areas, like for example, when you get into Simcoe, where there's some just non-populated areas that may not apply. So think of population areas within that regions that we were looking at definitely can work in those areas. Once again, thanks for these questions. Keep them coming. Put them in the comments below. I will respond to them as well. I know there's going to be lots of questions, so just keep in mind that there's lots of options out there. Co-ownership financing is just one option. There's so many other ways to get into home ownership right now, and we're here to help because it's about getting families into homes and impacting people's lives, and that's what we do. Any questions, don't hesitate. Again, comments down below. Love to hear them. Looking forward to seeing you in the next video.